What if the new oil isn't black, but silver? The next global competition isn't for a fuel you burn, but for a metal that powers our entire future. A quiet accumulation is already underway. For 5 consecutive years, global demand for silver has outstripped what's been mined, and the deficit is growing. In response, major global powers are making strategic moves. As of January 1st, 2026, China's new export licensing rules are tightening its grip on the world's silver supply, securing it for its own booming industries. This isn't about currency or cutlery. It's a silent race to control a metal essential for everything from green energy to military technology. So why are nations suddenly engaged in this quiet accumulation? What strategic shift is happening behind the scenes? To understand this shift, you have to look beyond the monetary value. Silver's real story is hidden in its industrial applications. As the most conductive metal on Earth, it is irreplaceable in our high-tech world. Demand from solar panel and electric vehicle manufacturing is surging. In fact, the EV sector's silver consumption is projected to surpass that of traditional auto manufacturing by 2027. This explosive demand is colliding with a critical supply problem. The market faces a structural deficit that has lasted 5 years and is forecast to continue. Mine output has been flat for years, as silver is primarily a byproduct of mining other metals like copper and zinc. You can't simply decide to mine more. This is how a resource becomes the new oil. Unprecedented demand and inelastic supply are creating a desperate scramble for the physical metal, fundamentally changing its perceived value. No nation understands this strategic shift better than China. While others trade silver on paper, China is focused on a physical accumulation. It's not only a major producer, but also the world's dominant refiner. By imposing strict export license requirements, Beijing ensures its domestic industries have priority access. The evidence is undeniable. Silver within China has been trading at a significant premium to the London price, a clear signal that internal demand is consuming every available ounce. This is more than a market trend. It's a calculated pivot. By controlling the flow of a metal vital for the green energy transition and advanced electronics, China is securing its industrial future. They are treating silver exactly like rare earth minerals, as a strategic national asset. The effects of this quiet accumulation are already visible. While headlines focus on the fluctuating paper price, the real story is in the physical vaults. Major exchanges like COMEX have seen a dramatic drain of physical inventory that is actually available for delivery. Industrial users and savvy investors are bypassing paper promises and demanding the real thing. This is the classic signature of a genuine supply squeeze. This isn't a typical market rally. We are witnessing a fundamental repricing of a critical resource, driven by scarcity and intense geopolitical competition. The rules of the game have been rewritten. For decades, silver was seen as gold's less exciting cousin. Now, its scarcity has transformed it into an indispensable pillar of our technological future, the new oil. As nations prioritize their own industrial security, this quiet war for physical silver will only grow louder. So, as this resource competition intensifies, you have to ask yourself, who holds the winning hand? The ones with paper promises, or the ones with the metal? Like if you think physical assets are the real wealth, and subscribe for more analysis on our changing world.